Hey, Katrina Madewell here. You're listening to Tampa Home Talk, and back in the studio is Sarah Nair with the mortgage firm, official show partner of Tampa Home Talk. Welcome back, Sarah.
Hi, nice to be here.
Today, we are going to chat about some of the different down payment assistance programs that are out there. You may have caught one of our other shows where we talk a lot about Hometown Heroes, which is one of the favorites on the streets today that got replenished July 13th, depending on when you're listening to this. And hopefully those funds stick around for a little longer. And some of our definitely public service workers and then some. There's a lot of occupations that qualify for this. If you missed that show, catch it in its entirety. We'll send you a link here in the show notes. But there's other down payment assistance available because some of the people that are working may not qualify for what we call Hometown Heroes, which is, the best program on the streets, right, Sarah?
Right.
So some of the other programs, what's an example of some of the other ones out there that might be a good match if someone doesn't qualify for Hometown Heroes because of occupation?
So if you don't fit in the box with the correct occupation to get into the Hometown Heroes, Florida Housing has several other down payment assistance programs, and they vary according to your income, according to how much you're earning, whether they're looking at the whole household or whether they're just looking at you, things like that. So we'll talk about three today. So Florida Housing has a program called Standard Bond. Standard Bond is going to have the lowest interest rate.
So on your primary first loan is going to have a lower rate? That's that? Okay.
The state, okay, so I'll back up. The state of Florida Housing sets the interest rate. That will be your first mortgage interest rate for the entirety of your loan. Typically, most of the time, it's lower than what you would get as a normal retail rate. To get into any of Florida Housing's down payment assistance programs, you're going to need a minimum of a 640 credit score. But at that point,
by the way, if you don't have it, hit us up. We can help you.
Right.
Sometimes it's a simple little fix, and this is where Sarah and I will collaborate, but she does way more of the heavy lifting. You might look at your credit and karma and go, dang, I have a 621. Don't let that stop you from calling or texting us because we can very oftentimes teach you how to grab those extra points. So our off-air number is 813-377-2775. If you're listening to this, don't dismiss yourself or someone you're thinking about that might want the opportunity to take advantage of these programs. 813-377-2775. You can call or text.
Yeah. So again, to get into the Standard Bond program, which is going to have the better interest rate, it's going to have a little bit more of a restrictive criteria. All the programs require the 640 credit score like we talked about, but the Standard Bond program is going to look at everyone in your household, and it's going to have a little bit more of a restrictive income limit. So right now for a 1 to 2 person household in Hillsborough and surrounding counties, you're looking at an income limit of $114,700. So
does that matter how many people are in the house or anything like that?
It does.
Okay.
It does. If that's a 1 to 2 person household.
Oh, okay.
If you've got 3 or more people in your household, you're going to be looking at an income limit of $131,905.
Okay.
But imagine it's looking at the whole household. So it really depends on your household. If you're by yourself or just with a spouse and you're making under that limit, great. We're going to use that program. But if you've got other people living in your house, adult kids,
mom, dad,
people that are 18, they're looking at the entire household's income. And so, that's where you can run into snags on the income limit. Standard for starters, most folks who have a parent or an 18-year-old in their household are claiming them on their tax return.
Oh, so that's a big place for that.
They're going to see that. For some folks, they're the beneficiary of their parents' benefit, and it's Social Security, and they see it direct deposited into their bank account. There are ways, that they can detect that sort of stuff. But so Standard Bond's going to be great for lower income earners that can stay under the limit because it's going to have the better interest rate. It's a little bit more cumbersome to document those loans because Standard Bond wants 3 years of tax returns. 3 years of income in order to go that route.
Why did you do that? Why are they looking 3 years when most lenders are just looking at 2?
Well, all loan programs typically only want 2 that we would traditionally do. This is the extra requirement to get the down payment assistance because this is what they use to constitute a first-time home buyer. They look at 3 years of tax returns to make sure no real estate was claimed for the past 3 years.
That makes sense.
They're not taking an income average going back 3 years, but that's what they require to meet their first-time home buyer goal. Yeah, just a little bit more of a restrictive guideline there. Standard Bond is going to give $10,000 at a 0% interest rate, no payment due, up to $12,500 with repayment due. So We'll talk about 10,000 first.
Okay.
So if I'm going to go, I want the no repayment option. I want the 10,000. Then you will be receiving 10,000 in assistance at a 0% interest rate. That's deferred. No payment due, no interest.
Deferred indefinitely until you sell or refinance.
No payment due, no interest due. It's just sitting there. You're using Florida Housing's down payment assistance for free until
you don't need it, and they're going to replenish the fund.
Until you sell, they're going to expect to be repaid back, just like any second lender, because they refund they put that money back in their fund for the next first-time home buyer. If you refinance, because interest rates get better, and you say, hey, I can get a 4% rate today, you're going to want to refi. And when you refinance your first mortgage, then they will be paid off in that refinance. And the third time that it would be owed back is if you cease to occupy it. These funds in this program is designed for first-time home buyers to help them achieve, homeownership.
Right.
And so if you turn it into a landlord situation and they find out, they will expect to be repaid. So that's how
that makes sense. Yeah.
If you opt for the $12,500 in assistance, then you will have an interest rate. It'll be 3% on that second mortgage, and it will be repayable. And so based on $12,500, the repayment on that is $52.70 a month. Okay. We don't do it often, but it is an option, just so you know.
And they have to repay all of it or just the difference?
All of it.
Okay.
Stays in repayment. Yeah. Yeah. So, and in all three of the programs I'm going to talk about today, same thing for Hometown Heroes, you're going to have to take a home buyer educational course. So the home buyer education is free. It's online, takes about 30 minutes, teaches you some kind of important things to know walking into your first home.
It's not a bad thing to do. I think all of the loan programs should require a first-time home buyer class. I know you hate it because it's extra layer as a lender, but as someone that really wants to protect these first-time home buyers, I love it when they make them take a first-time home buyer class. And hopefully you guys are paying attention. You're getting some stuff out of this.
Right. So when you take that class, it's free. Again, it takes 30, 40 minutes. It's going to give you a certificate at the end. We pop that in your file before you close and we're good to go. Another thing, just to dispel any misconception about the down payment assistance, you as the buyer, as the borrower, not running around town jumping through hoops. We facilitate this down payment assistance for you. We request all of the documentation. We reserve the funds. We underwrite the file according to the requirements of the first mortgage.
And you basically get the money for the buyer.
Yep. And we underwrite according to the criteria of Florida Housing's program. So nice. We're doing all of that for you, other than you taking the online home buyer education.
Yeah, you have to see that part.
Yep. So that's kind of how the standard bond works.
And that one's available pretty much all the time, right? That fund never really runs out of
correct. And none of these three do. Honestly, they don't really. It's not like Hometown Heroes where the funds will be gone pretty quick. The next program is called Standard TBA. And same thing. It's going to give $10,000 with no repayment, 0% interest, or the $12,500 with a small repayment at a 3% interest rate. The difference in this program compared to bond is we don't need 3 years of income documentation, and we don't look at the household income. Now we're back to just looking at the applicant. On top of that,
that very well, we see childcare expenses are so high. So a lot of times you may have one spouse home and the other one's working.
Correct. Right. Yeah. So at the end of the day, I could have a spouse in my household that works and a parent and an 18-year-old with a part-time job, but they're only going to look at my income.
Okay.
In the TBA program, the income limit is higher. So unlike standard bond, where a 1 to 2 person household is $114,700, a 1 to 2 person household is $131,905. Okay. So you get a little more flexibility.
905. Where did they get that weird number from?
That's the number. So that's all the So imagine,
take a different average, you're going to get a different number.
So of the three programs that we're going to talk about, understand every time we step it up a notch, increase the income limit or something that gives a little more flexibility to the program, the interest rate's going to move.
Okay.
And that's just what.
So that's the interest rate on the mortgage is a little higher.
So for example, if I compare FHA in the standard TBA program to standard bond, the interest rate's 0.25% higher.
Okay.
But for that 0.25%, you're getting the assistance, the flexibility of the income. They're only looking at you. They're not looking at your household. And so it just.
At the end of the day, it's whatever product you're going to be able to fit into.
Correct.
Right.
Last product. And so this is called Plus TBA. This is an interesting program. This is going to give you anywhere between 3 and 5%. Depending on the level of assistance you request, that will determine your interest rate. The Plus program, unlike the first two we talked, so I'll back up for a second. The first two we talked about, that down payment assistance is available for government loans, FHA, USDA, VA, conventional.
So any loan type.
Any first mortgage loan type. The Plus TBA, this last program we're going to talk about, is specific to conventional, but not just Fannie Freddie. Freddie Mac only. Freddie
Huh.
Mac only convention.
That's interesting. I wonder where that is.
Yep. And so at the end of the day, that program is going to give you anywhere between 3 and 5%. And your interest rate is basically determined by the percent that you ask for. So if I only need 3% going conventional, that rate as of yesterday is 7.125.
I was going to say, why would someone even pick that one with the higher rate and higher everything?
If I need 5%, now I'm at 7.75.
Oh,
So it's rare that we use that 5% down payment assistance program. But it's there if someone needs it. It's only going to look at you as the applicant. It's going to have an even higher income limit. You can be $160,500.
so income might be why someone would choose that.
Yeah, that limit is even higher than the Hometown Heroes limited.
Wow.
Which is a super high.
And that's not a dollar amount. That's a percentage.
Sorry,
Is it the down payment assistance amount? Is it a dollar amount? Or
it's a percentage of your loan amount.
So they get 5%.
Yep, they
Wow.
get 5% of the loan amount. Here's the difference that this program has, even though it holds a higher interest rate against all the other down payment assistance programs. This one's forgivable.
Hmm.
So when we talked about standard TBA and standard bond, just sit there.
They're paid back at some point.
They're paid back at some point when you sell, when you refi. They're just sitting there silent seconds. And I hope I didn't misspeak on this program, but this one is forgivable. So this program is forgivable at a rate of 20%. Starting on the anniversary of your loan closing. So imagine it's fully forgiven in 5 years.
So after 5 years, it's totally paid off.
Right. So that might be another reason, if I am a high wage earner, to maybe move into that higher interest rate to get those funds, kind of as a Band-Aid, knowing that it will be, forgiven over time.
So if they refinance and pay it off for a better rate, a portion of that's getting paid back.
Right.
Likely.
Right.
That makes sense.
A portion of it's getting forgiven, a portion of it's going to be repaid.
That's not a deal, though, especially for someone that has that higher income earning potential, because so many times we see where people actually don't make enough to qualify for the loan, even though they qualify for the down payment assistance.
Yeah.
This one really opens up some options for folks to get that help they need to get in their first home without all the income restrictions.
I can tell you from personal experience, because I do a lot of down payment assistance, and I'm actually a loan officer that's referred on Florida Housing's website. So having dealing with these programs all the time, the two I touch the most with are Hometown Heroes when funds are available, and actually that standard TBA. Because it's, I don't have to imagine in that bond program where you have to give 3 years of income and they look at the household. I need tax transcripts on everyone, not just the applicant. So that standard TBA that's only slightly higher in interest rate gives me a higher income limit, only looks at the applicant, and has a standard normal documentation process. So that's kind of, for me, in the clients that I serve, that's the sweet spot. Yeah. I have used that plus TBA a handful of times. If I can use standard bond, because the client's well prepared, they don't have a big household, they've got 3 years of taxes, I'm always going to go for that if they meet that income criteria, because it's going to be a tiny bit of a better rate. Yeah. But TBA is kind of the sweet spot.
Makes sense. Yeah. It's the fact of the matter is, I don't want you to assume that you make too much money to qualify for any of this down payment assistance. And I don't want you to think that homeownership is ever out of reach. So if you're listening to this, share this with some of the younger audience, your kids, your grandkids. That first time home buyer age has significantly moved up over the last several years. We want to get some of these younger home buyers in the opportunity to own their first home sooner. That way they can get on the path to building wealth faster through the equity in their home. This is Tampa Home Talk. I'm your host, Katrina Madewell, hanging out with Sarah Nair of the mortgage firm. She's official show partner for Tampa Home Talk. And remember, love where you live, or we're going to fix it. Welcome home.